Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 10th of July, 2019. This is episode number 1552. Thanks for coming back. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as you may have noticed, the market was actually adrift downwards through most of the session in the overnight, and got a very strong pop higher on Fed Chairman Powell's statement. The chairman is due to testify in front of Congress today and tomorrow. That starts at 10 a.m. And there will be a Q&A and a discussion, questions from members of Congress, and mostly political posturing. But his answers do make a difference to the market. The statement that was released at 7:30 Central really defines the Fed's most recent posture in terms of the market. It says that there's a risk weak inflation will be even more persistent than Fed currently anticipates, which means it is likely to remain at a minimum remain put as opposed to raising and potentially dropping. Uncertainty since June FOMC continued to dim outlook, and the fact is the FOMC June meeting minutes come out today at 2 p.m. Eastern U.S. time. So that's what we need to look out for. Crude is the leader today, up $1.31, up 2.25%. Gold is at $1,411.40, up $10.80 or 0.77. And then the Nasdaq takes the lead in terms of indices. The Nasdaq's up 54 points or 0.7%. The laggard today is the U.S. dollar, of course, because the inflation outlook makes it so that the yield on U.S. instruments is not as attractive. The dollar gets a bit of a hit. That's the dollar and gold generally move in opposing directions. The Bund is down 56 ticks or 0.32%, and the DAX is down 4.5 points, almost unchanged. The U.S. bonds are up a tick, and the notes are up 5 big ticks. So that's where we stand today. We have a gap up in the S&P minis. We have a strong close from yesterday. We'll go over that in a minute. The calendar and what's ahead for today. Now, we got several key releases. Last night at 9:30 Eastern, the Chinese inflation rate year on year came in line at 2.7%. You know, these governments, I don't know what's true and what's not, but also we got the Great Britain balance of trade at 4:30 a.m. Eastern. Came in much better than the prior. The prior was negative 3.7 billion. This came in at negative 2.3 billion. Other than that, there were a bunch of releases. The Bank of Canada interest rate decision should have been released just now. And looking ahead, we do have, again, Fed Chair Powell starting his testimony at 10 Eastern, along with wholesale inventories. Crude oil inventories come out at 10:30 Eastern. The API numbers were released yesterday, showing a pretty big draw. We get Fed's Bullard at 1:30. We get the FOMC minutes at 2 Eastern, and so on and so forth. So there's plenty here to deal with in terms of outside influences. Let's take a look at what we expected yesterday versus what we got in our review segment. And yesterday, the primary expectation, the main trade of the day was for, given the market signaling likely top, which I talked about on Monday, the primary expectation is that we would revert back, we would get responsive buying We were opening right on top of the MC point of control, and we would likely get the responsive buying into 73, 73 right here, with 75 to back it up. 75 is this IB low over the last couple days. So the expectation is it tests 73. At most, it would be at 75. So the trade was a short around 73 with a stop above 75 or so, and looking for it to return back into the MC point of control and to push the overnight low for a squeeze down into 29.56 or so. That was the primary scenario. That scenario didn't work out. The secondary scenario did. In fact, the secondary scenario started with a push up, pull back, and then a squeeze back into the prior day's range. Here's what happened. So we got the responsive buying. We go to right to 73s. You see here on the dot. 73 on the dot. I did not, in the interest of, I've always been transparent with what I commented on online. In the interest of transparency, there was just nothing there. The primary trade was a short 73, and it went right to 73 on a pretty strong, relatively strong delta and rotation, and just did not show anything for me to just hit the bid and get in. I don't put orders out there and wait for the markets to lift my sell orders as it approaches. I'm a proactive trader, so I'm looking for a sign of weakness to sell, a sign of strength to buy. And so I could not get on the 73 short back to the mid. The mid, it pushed down to the mid to the tick. Remember, this is an impulsive move up. It crosses above the 5.25. It's 7 points. And so the mid, so now we have this conflict with scenario one being a 73 short. And now we have an impulse mid long, and I did not see a signal for the 73. I passed on the mid long, and that turned out to be the golden trade. I ended up looking at the 73 short at the failure at 72.25, 72.75, and entering and looking for, and engaging at 72.25 for potential rotation down to squeeze through the IB low or the opening swing low, and to get us on our way on the on trade scenario one, and that didn't work out. It ended up pushing to 75. 75 again becomes the IB high. It was the IB low, and then became the IB high yesterday. It was the IB low Friday, IB low Monday, and the IB high yesterday. And now it's the key low volume node, and it's the line in the sand, the key line in the sand. Once it pushes through, it pulls right back to 75, gets into the point of control, which is scenario two's goal here, gets into the point of control in the value area. The value area is right there, and it just holds steady, which is what's expected once it gets back into the value area of a balance day. It's expected to hold steady there, and then we get this strong push into the close. A strong rotation up with a relatively strong delta. Surprisingly, we ended up taking out the high of the prior day at 29.8475. We went to 29.86 1/4. Did not expect that at all. We have a multi-distribution profile. It did look like it was balancing out, but ultimately the market has shown that it's not finding consensus, and that buyers were relatively dominant, and it is not done to the top side. You can see this small double top here, and it's likely to drift higher into the overnight session. That's the recap of yesterday. Coming into today, we again we did not appear to complete the buy side, and so we expected a higher high, and we ended up getting it at 87.50. From there, the market really has been drifting down through the entire U.S. extended hour session until the comment from the statement from Fed's Powell, and you can see how strong that was. The SOC for this move, the SOC for this move is, I marked it down when it happened. It's 2976.75, 2976.75. So right around this MC point of control. And we pushed approximately 20 points on the comments from Fed's Powell, puts us at the non-farm payrolls release point, or the scene of the crime, from non-farm payrolls from last Friday. So we're above the weekly close now, and we have significant strength here showing in the overnight session. So we're going to gap up coming into the session. So what about what's expected for today? Now remember, there's a lot on the calendar, right? So pay attention to that. The overnight point of control coincides with the microcomposite point of control. The microcomposite point of control, essentially what a microcomposite is for anybody that's new here, a microcomposite is a volume profile that is created when we have a market that is kind of moving back and forth on itself. The microcomposite helps us determine where the most traded price is and what key areas, like the low volume nodes, what key areas the market is likely to test. That's what a microcomposite is. A microcomposite is this profile here, which incorporates several days. What days does it incorporate? It's a function of balance. Once a market starts to snake around itself, we basically, let me do this. We basically put up a microcomposite so we can see where the volume has been. So you could see here the volume has shifted up based on yesterday's action to 29.77, and the overnight point of control is at 29.77, right on top of the MC. We know that up here at 29.8750, I talked about this level on Monday. That was the Monday was we were expecting to test this 8750 before rotating down and moving towards the MC point of control, which was down here, and we failed to do so. We turned on Monday at 84.75, or on Monday at 84.75, and now we are above this MC point, the MC low volume node, which means that the high is very, very vulnerable now. I know that there are many, many perma bears, and everybody thinks the economy is going to hell in a handbasket and has gone too long on this rally, and that the deficit is crazy, and blah 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 blah. But the fact is, we're looking at price action here. We're looking at what the market is pricing in, and at the end of the day, it's the price and the volume that is traded at each price. In other words, price is the asset that we're trading, and how much of it is a function of volume, and that's where volume profiling is king. Once I got into and started creating my approach using volume profiling in 2005, I all of a sudden I can see inside of the bar, as opposed to looking at just price action and whether the 5-minute closed below the 20 moving average or whatever, which seemed to me, and not that I'm putting that down or anything, it just seems to me that is arbitrary. Why is a 5-minute close below the 20 average more important than a 15 close below the 60 average or whatever? But volume doesn't change with time frame. You can choose whatever time frame you want. The volume is whatever traded at that price. At that price, period. It is how much demand there is for per unit of price. And so when we look at the composite, the point is when we look at the composite here, we see that very little traded at 29.8750. We see that the market was most active around 29.77. We see that there's a neckline that it has put in at 29.73, and it has another high volume node or an acceptance area at 29.66. Um, these are important factors because at the end of the day we're trading price, and when we trade price we exert volume on it, right? The energy we're putting into the market is volume. And so this is so I'm explaining this for you to understand the context, and that's the point of this trader bite. It's not to sit here and cause a dependency between you and me, because that's a lot of people are doing that. I'm not interested in that. I'm interested in you trading well and using your moving averages and whatever you want to use, but also looking at the auction itself, because at the end of the day the market's an auction. The primary scenario is an open auction out of range. I'm looking for it to revert back at least to 92 or so. And if not, then it's likely to test this 87, 88 area uh, and come back up and start to squeeze through the 3000 and push into 3006 and the areas above there, 3006, 3009, 3014. That's the primary scenario. I expect a small reversion or responsive selling. Inventory is long into the overnight session, and I expect that to balance out a little bit before the market bounces. So the idea this morning is to see the quality of the move down. I may not be able to catch the move down at the open, probably not. I'm not a breakout trader, but the quality of the move down, how is it printing on the way down, will tell me when it's time that I have a likely positive edge of getting long, looking for a push into 29.97.75 and then 3001 and a half through to 3006. So that's what I'm looking for. Secondary is an open auction that pushes immediately into that 97 area, pushes the 3000 into 3004 and 3006, and then starts to push back into the close. We end up in either case with a gap zone beneath us, and what looks like a day that's tackling the high. Now remember, we're above the neckline here on the composite, and there's very little consensus. Look at the volume in this area. There was very little consensus on these days. These are basically trend days, both of them. Okay, so I'm not expecting the prices would stabilize here. I expect the market to test to find those sellers, and when it does, I expect that the sellers will, when they come in, are likely to squeeze below the 3,000, the millennial figure. That's what I have for you for today. Because it's out of range, although it's in the range of last week's Wednesday and Friday. Although it's out of range, we do have an elevated possibility of an open drive and an open test drive. Be cautious. If you see the market come in with size directionally, don't be stupid. Do not try to sell that because it's gone too far. That is not a plan. Just don't do it. It is, once you get paid on that, you're actually setting yourself up for failure, and your goal is to set yourself up for success. If you see an open test and a drive in a direction, the goal, in my opinion, the goal is to try to align yourself as much as possible with the direction of that drive. And that could be an open test higher, drive lower, in which case I'll be looking for any area to lean against to go short, or an open test down and drive higher, which is scenario 3, in which case I'm looking for any pullback, any failure to get long in the direction of that drive. Okay, good luck, and I'll catch you tomorrow morning. Take care.